Hi students, welcome to our third video on the audit on trade payables. In this video, we'll be covering the audit procedures on confirmation. Learning objective 3 is to understand how confirmations are used to obtain evidence about trade payables. The confirmations that is being referred here is the same as the confirmation of the trade receivables. The only difference here is instead of sending a written request, i.e. the letter, to the customer, now the letter is being sent to the supplier. So this letter will be able to help the auditor to obtain evidence on the main assertion of completeness. We said here accounts payable confirmation are used less often than accounts receivable confirmation. The reason why it is less often used is because when we audit accounts payable, usually supplier statements are available. So if supplier statements are available, auditors can actually rely on the supplier statements to give you evidence on the completeness of the balance. This is because whether is it supplier statement or accounts payable confirmation, what the auditors want to know is the balance based on the supplier's record. And both supplier statement and supplier confirmation provide the same information. However, sometimes supplier statements are unavailable, or auditors decide to send confirmation because confirmation is a higher quality evidence compared to statement. When that happens, we say that the auditors is sending what we call a blank confirmation. What blank confirmation here means is, in contrast to trade receivables confirmation, trade payables confirmation balance is intentionally left blank for the supplier to fill in. Why do we want the supplier to fill in the balance themselves? It's because we are testing the assertion of completeness. When the suppliers receive the confirmation request, they will fill in the value based on their records. So upon receipt of the reply by the supplier, the auditors will compare the indicated balance by the supplier with the company's record to check whether there are any differences. In the accounts payable confirmation, it is important that the auditors maintain control over the whole confirmation process. So you need to be in charge of the sample. Who do you decide a confirmation should be sent? You need to be in charge of the sending part. So in particular, you need to check the address again. You need to check the signature. However, in this case, you don't need to check the balance. And the reason is, in a supplier's confirmation, it is a blank confirmation. And finally, the control needs to be maintained over the responses, i.e. the replies. The auditors must be the one who receive back the reply directly from the suppliers. So for confirmation that you have received back, these are the 3 steps that you need to do. It is the same procedures as slide 7 of the video 2. So again, you need to do balance per company, you need to check whether there's any reconciling items, and then balance per supplier. The only difference here is this value of balance per supplier is obtained from the confirmation reply.
So what happens when we do not have a trade payable confirmation reply? So when there's no reply, we need to perform alternative procedures. So such alternative procedures will be to check to the supplier statement reconciliation. So this is the comparison between the supplier statement and payables ledger, and if there's any differences, the accountant will have done the reconciliation. Where the supplier statement is not available, the auditor should trace to the supplier invoices and delivery orders and check to subsequent payments. So from here, we'll be able to know that the items have been received, and if you have paid up, we'll be able to check to the subsequent payments. And these alternative procedures are generally quite reliable because the supplier statement and the supplier invoices and DO come from the supplier, which is an external source of evidence. So in the next video, we'll be going through the search for unrecorded liabilities.